Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
G'day and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz as we get this week and the new month underway. Let's take a look at what we saw on Friday though. Global stocks falling, but rounding out a positive month on Wall Street. The major indices finished in the red. That's ahead of a long weekend. Now for the month of August, the S&P rising almost 2%, the Dow was up 3.2%, the Nasdaq putting on more than 1.5%. And the small cap Russell 2000 rallied 7% in August. On Friday, tech stocks came under pressure, led by losses in Dell, which tumbled almost 9% after high manufacturing costs for AI optimized service and intensifying competition overshadowed the company's bullish demand forecast for AI infrastructure. Nvidia is down for a third straight session after its quarterly report midweek, which fell short of investors' high expectations, but confirmed that spending related to AI remains strong. US shares of Alibaba soared and were among the most traded after the Chinese company reported stronger than expected quarterly growth in its cloud computing business, driven by AI-related demand, and also on reports that it is developing a new AI chip. Shares in chipmaker Marvell slumped though, almost 19% after forecasting quarterly revenue below expectations. And global economy bellwether Caterpillar fell after the heavy equipment maker forecast higher tariff-related expenses for 2025. Well, US consumer spending increased 0.5% in July, the most in 4 months, while personal income in July rose 0.4%. The core PCE deflator rose 2.9% year on year. As expected, services inflation had picked up, but economists did not believe strong domestic demand would prevent the Fed from cutting rates next month against a backdrop of softening labour market conditions. Fed member Mary Daly saying interest rates should be lowered soon, saying it'll be soon time to recalibrate policy to better match our economy, and that tariff-related price increases will be a one-off. And it'll take time before we know that for certain, but we can't wait for perfect certainty without risking harm to the labour market. Well, the US tariff exemption for package imports valued under $800 ended on Friday, raising costs for businesses and consumers. This as the US appeals court ruled that most of the Trump administration tariffs are illegal. The court allowed the tariffs to remain in place through to October 14th to give the administration a chance to file an appeal with the US Supreme Court. The US two-year Treasury note fell to 3.61%. The 10-year yield was actually up to 4.23%. And the US dollar weakened against a euro and also the franc, with a 2% decline over the course of August against a basket of currencies as traders prepare for rate cuts next month. The Aussie trading at 65.4 US cents. And Bitcoin has fallen back to close to 108,000 US dollars. Oil prices fell on Friday as traders anticipated weaker demand in the US and a boost in supply from OPEC. Brent crude futures settling at $68 a barrel. Copper was up almost 2%. Iron ore fell to $103 a tonne, and gold rose around 1% on Friday, rounding out its best monthly performance since April, as US inflation data reinforced expectations the Fed could cut interest rates next month. Spot gold at $3,446 an ounce. Let's now get across what we're seeing globally, but specifically what we're seeing in New Zealand. Brad Gordon joining us from Forsyth Barr. Brad, welcome back. Good to catch up with you. Well, let's start on your side of the ditch then, and what you've seen in the wake of reporting season.
Yeah, well, a very polarising reporting season. I think you'd have to classify it as here. Some companies that did reported good numbers, such as the Frontier Shareholders Fund, A2 Milk, Scales, all relating to probably to agriculture, primary industry, have had really, really strong performance. On the other hand, Igbos and the like that reported numbers that just missed market expectations were treated really harshly. So quite a binary outcome. All in all, the Index 50 has closed up the just over or around about 0.5% for August, and is still sort of just really trudging along at about 4% for the full 12 months to the end of August. So it's still relatively difficult out there for the New Zealand bourse.
What do those reports tell you about the state of the New Zealand economy at the moment?
Well, I think anything domestic oriented, particularly anything construction, is still really, really slow. We've seen a marked change in the Reserve Bank's acknowledgement of their domestic economy now. They cut interest rates 25 basis points to 3% OCR in mid-August, 20th of August, I think it was, and signalled that another 50 basis points is coming, leaving the door just slightly ajar to a 50 basis point cut in October. So watch this space. That will be stimulatory. I think we need a 2.5% OCR to be stimulatory for the New Zealand economy, and I think we need it. And that's going to be really good for some of our yield-oriented stocks.
So how do you view earnings going forward? And did you get much guidance from those companies?
Well, the guidance from the construction-related companies, Steel and Tube, Vulcan Steel, Fletcher Building, is don't expect much until 2027 financial year. So they don't see many green shoots on the construction side of things. On the other side, the agriculture, we're seeing a really big milk power coming up. $10 a kilo, which is really positive for farmers. Even sheep and beef farmers, land prices that some lambs traded at $300 a head recently. So the agriculture side of the economy is starting to perform well, and hopefully we start to see that feed through to the cities at some stage and see some of their construction come through. Just thinking. Elsewhere in the market, the energy gentailers have reported strong results, and the demand for electricity outlook is particularly strong. So that yield support is going to continue to be there as well.
And Brad, more globally, what are your observations about what we're seeing at the moment? I guess with particularly the focus on what's coming out of Wall Street, and obviously anticipation the Fed may well cut interest rates next month.
Yeah, I think zooming out globally, the one trend I think you can point to is that interest rates are going to come down. The Fed funds rate will come down. I don't think there's any chance of at least a hike anytime soon, and that's a broad backdrop positive for capital markets. So, look, it's really hard to see what might derail current performance. I think capital markets are going to perform pretty well in the foreseeable future.
All right. Beyond perhaps where you're looking at domestic market, where do you think you'd like to be it the States or Europe or perhaps some of the emerging markets? What are you watching at the moment?
Look, about one theme that might come through, we're just starting to have discussions with is some US dollar weakness, and that does help emerging markets. So that's a discussion we're just starting to have, because as the Fed funds rates does come off, should see the US dollar weaker, and that should be stimulatory globally as well. Obviously, there's a lot of noise around where the tariffs will end up, and that's really difficult to call. But then in the US, the leaders there are just so strong. And I think you just have to have a good exposure. That NVIDIA result late last week was quite incredible, and it's creating new industries by investment. if you see some of their investment that they're putting into emerging companies that will just be utilising NVIDIA chips, is really quite incredible.
Brad, great to get across what you are watching at the moment. Thanks for joining us from Forsyth Barr.
Good to see you. Thank you.
Now let's refocus then on what we're likely to see locally as we get going. As you can see, SPI futures off 0.3%. So that's as we get September underway, bearing in mind on the ASX 200 we finished up around 3% for the month of August, reflecting what we did see in earnings season, which was volatile. The winners really winning and the losers being punished heavily. So let's see what September holds. Stay with us. We'll get across the open in just a couple of minutes' time.